Hi, this is Simon with Trade and Perform Coaching, going over what was a pretty crazy day, Friday, September 6th, and it was non-farm payrolls day. This video is purely for educational purposes. Anything I mention should not be taken as a trading recommendation. Trading futures is dangerous, and you should consult a trading professional or an investment professional prior to trading futures to make sure you are well suited for the risk that's involved. So looking at the open, I had tweeted out on StockTwits and Twitter prior that I was looking for 63 to 65.50 on the high end of the range, and I was looking at the low 40s on the low end of the range. I had no idea that I was going to be quite so accurate for the day. It was a crazy day. So we tagged 63.50 in the pre-market, and one of the things I was looking for off the open was for us to, we opened with over a 1,000 tick reading, and I tweeted out, hey, I expected a retest of those Globex highs, possibly even breaking them relatively quickly. When we didn't get it, when we had such a high tick reading, that was the first caution sign for me. We just simply, in my opinion, should have gone up and tested, as we did later in the day. And so that was the first sign of caution, even though we did get a 2-point rotation off the first touch of the 1658 area. Again, I was very leery of the zone, and I had warned out, and sure enough, we had plummeted through. Now, another issue that a lot of clients have is that, not just clients, but traders in general, is taking trades in rapid succession and getting buried on losses. Okay, losses are just part of trading. Everyone knows that. I'm really big on simply accepting your stop and taking it. However, when you get stopped, it's often a very healthy practice to simply give yourself about 10-15 minutes of time in between the time you start your first trade, get stopped, and before you take another trade. Why? Because if we're busting through zones the way that we busted through zones here, I want to see that the markets, that there's not something crazy going on, that a plane hasn't crashed into a building, that a bomb hasn't exploded somewhere, that I'm not stepping in front of a meltdown situation, right? It's very rare for me to get 2 trades within 10 minutes. So this is a sign for me to pause, kind of take a look around, and assess the situation. Now, where I did end up taking a trade, I avoided this. I did not take a trade in this zone. It was simply getting blown through. I did think we could have some responsive buyers right here at Globex low. And so I took a trade in the middle of the zone. I had a 3-point stop, and I simply got tagged. That's all there is. That's all there is to it. I got tagged very quickly. So when we came down into initial support, I was looking to get the short side on the first time into this zone, and I did take the short here, and I got a very quick 2 points out of this. And that put me down 1 point on the day. So at this point, I was just kind of taking it easy. We blew through initial support again. Clearly something was going on that I did not have a grasp on. I don't analyze news. I'm not qualified to analyze news. I have no edge in analyzing the news. If I did it 100 days, I'd only be able to figure it out on one. So after we had bounced, I kind of figured we'd had a 10-point bounce. We'll probably get a rotation at least 2 point lower at the zone was my anticipation. And I took a short right in here, and I was wrong. That's all there is to it. I was simply wrong. I didn't get the 2-point rotation, and it pushed up against in a big way, and I ended up taking a 4-point stop. That's okay with me. At this point, I'm only down 5 points on the day. It's not a big deal. My day stop is 10 points. My stop on a back-to-back stops is 2. That ends me for the day. At this point, I haven't been back-to-back stopped. I'm halfway through to my daily stop on a points per day that I'm willing to take per contract. So at this point, I've got 5 points, and I tweeted out, hey, I'm just going to kind of take my time. I'm trying to lead by example. And by doing that, I give myself space to assess the situation. Well, clearly I'm wrong on the short side, and clearly a lot of people are wrong on the short side. The news isn't as bad as whatever it appeared to be initially, and we're pushing all the way up. I figured by the time we got back up to Thursday's highs that we would find some responsive sellers there. And I shorted the back of this zone with a 4-point stop. Now, why the 4-point stop from the back of the zone? Okay, so when market volatility increases, you have to adjust your stops appropriately. We're already at 2.5 times the average trade range in the market. A 2-point stop is just going to come in and get tagged. There's no point. I'd just be donating money to the market from my perspective. So I put a 4-point stop on the trade. That would put me 9 points on the day and pretty much finish my day as far as being negative goes. Instead, I patiently rode the trade out, and I don't freak out. When I get this situation, I simply don't freak out. I can wait. And eventually it came in and it gave me my 2 points. It didn't exactly give me my 2 points. I was only able to cover 3/4 of the position. I was left with a quarter, and I simply covered it break even. So at this point, I'm down about 3.5 points on the day. And one thing people should know if they're following me, I do not call out every trade I take, particularly the swing trades. I consider the swing trades very valuable, and outside of my coaching services, I'm not selling the trading platform. I'm not selling the levels themselves. They're there for educational purposes, and you use them at your own risk, and you use them as you see fit. I'm not even claiming to be the best trader of the zones. It's simply the way I manage them and I handle them on most days. So if you look here, we had tick divergence coming up into the top of this zone, and I made quite clear in the pre-market video, which I believe I'd already released at this point, but 1663.50 to 1666 in this area was a big area. I was looking for responsive sellers in this area, and we just had huge tick divergence. This is tick divergence. If you can't tell, we hit a high on the tick. We continue to make new highs. That's right into the zone. I will take that trade every single time, every day. It's a great place for me to launch my swing trades from, and I ended up having a very nice, profitable day. In retrospect, do I wish I'd called the trade out? Sure, everyone likes to, get some glory for that, but I don't get paid for calling my trades out. I get paid to teach people how to trade, and even at that, that's a complete hobby. I make my living from trading the S&P and the euro, crude and gold to a lesser extent. So I did call out, I did tweet out that if we held below 1660, that it opened the gate to 1652 to 1654. But I want to stress, I'm not a trade calling service. It's not the point of this vlog. If that's what you're looking for, you're in the wrong place. I have started to call more trades out, but you have to be able to make your own trade decisions, and part of the hallmark of a good trader is taking responsibility for your own trade decisions, for building your own trade plan and building your own strategy, and then executing it in a responsible manner. No one can do that for you, and until you do that as a trader, you'll always have this anxiety and kind of holding out for, is this guy right or is he wrong? Anyone who started following me this week might actually think I suck as a trader. Quite frankly, it's been a tough week. Let me tell you, the last 3 weeks have been a real challenge. Even though I've had a very good 3-week run, it's really been a lot of hard work, and the stress levels have been higher than normal. The P&L has been there, but it's just been harder work. And this deal with Syria and the random news and the politicians speaking out of the blue, I really hate it. I wish it would end. I like just going about the business of trading the order flow and trading the levels, and the levels themselves give me my edge. So hopefully this V-shaped stuff that we've been getting a lot of the last 3 or 4 weeks will end. It's not fun to trade. It's hard to trade. Directional moves are very hard for day traders because we tend to need counter rotations to make our trades work. So that's my 2 cents about that. So the day ended off just about what I expected. And then the other thing, and I was talking with one of my clients late Friday afternoon, if you take away the news event from here, kind of look at the range that we had and what I was looking for. I was looking for 63.50, and then I said, I probably assume that this 1653 is going to hold us, right? And if you kind of look at how the market traded, let's say this was the new open to the market right here, right? We came in, we tested Thursday's highs. The first time we rotated out, we came into Globex high, we rejected. Second time into this zone, as again, the focus is on the first time in the zone for most of my clients. We kind of eventually flushed through, And then the first time into this gap fill, again, once all the craziness was gone, we did get a rotation. It was a small rotation. It was the end of the day, but the zone held. So one of the questions I always have is, are the zones valid, or have I lost my touch? It's something I ask myself constantly. Have I done the best job I can in coming up with these zones? And the rotations here, the rotation here, the rejection here, the rotation and rejection here up, all of that tells me that, yeah, I did a good job. The pause at the zone and all those levels give me is an anticipation that there'll be a pause or a small rotation at the zone. It doesn't tell me anything more than that. It's not like I have Superman abilities with these zones. There's a reason why the zones are there. I teach my clients how I derive these zones so that they can do it for themselves. And then the trader has to become somewhat pliable and adaptable. It's not a canned system. You have to become adaptable to the market environment. And if we're ending up with 20-point swings in each direction, you have to adapt to that. You have to respect your stops. And you have to be able to say maturely, the market doesn't owe us anything. We have to adopt to the market. Okay, and I have a methodology and a way of building confidence within myself so that even if I have a losing day or I'm down on a day, I don't freak out. I know the market will open again the next day. For example, we all know that we have the Syria thing coming up on Tuesday. We all know that we have the Fed meeting coming up and the talk about taper that will be going on. We have the Apple event over on the NASDAQ side, and Apple's been driving NASDAQ significantly over the last couple of weeks. All of this is contributing and playing into the hands of volatility. And so consider that when you're trading. What are things you can do to compensate for the volatility? Cut your position size is one option. I haven't opted to go that route yet, but I could. This week might be pretty crazy, and I might get to the beginning of the week and go, I'm just going to cut my position size in half to make sure I survive this week without taking a stop or a series of stops that might hurt me. Another thing that you can do is simply pay very close attention to when the news releases are coming out, if they are scheduled, and decide not to trade during that period of time. Last time there was a Fed event, we had 20-point moves in each direction, 20 up, 20 down, and then at the end of the day we had another 10 down after that. I don't thrive well in environments like that, so I may simply choose not to trade that, or I may cut my position size down to 1/4 of what I normally trade to compensate for that range. Would I like to hit a 20-point home run? Yes, that'd be fantastic, okay? But what usually ends up happening is not that, but that I get stopped out because of the increased range, and even a good trade entry, which under normal circumstances, the 3 or 4 point rotation would have paid me handsomely. When we have 20-point ranges, I just end up getting tagged out for a full stop, only to watch the trade go in my direction. And everything within my methodology and these levels is built around avoiding exactly that, getting high quality entries and having my stops account for the volatility that's in the market. If I'm having a 20-point range, right, that's 2 times what the normal range is. That might mean that I require a 5 or 6 or 7 point stop to deal with that, right? That I may not be able to get pinpoint accuracy on my trade. Well, if that's the case, right, why do I want to involve myself with the possibility of taking a significant loss? And the answer to that is I don't. I probably won't be trading the Fed release. I'll wait till the following day, and I'm going to be cautious on Tuesday. I'd like to see what time the president's going to address the nation. I don't want to get caught with my pants down, so to speak, with a large position and having 1 or 2 quick stops when I can just simply bypass the event and go on to have the rest of the week be very profitable and fruitful for me. So I certainly hope this helps some people. My name is Simon. I'm a trading coach. I've been doing this for a long time, since 1994. If you're a struggling trader, if you're a new trader and you would like to get consistency in your trade results and stop the vicious cycle of profitable days and losing days that either have your account down or not making any money at all, feel free to contact me, tradingperform@gmail.com, or drop me a line on Twitter or StockTwits. I hope everyone's having a wonderful weekend. We will see you on Monday. Goodbye now.